Welcome back to the deep dive. Today, we're jumping into United Airlines Q2 2025 earnings. Now, you might have seen some headlines that seem, well, a bit contradictory, maybe. Some celebrating profit, others pointing to missed sales targets. So, our mission here is simple. Cut through that noise. We're going straight to the source materials, the earnings release, the investor updates, analyst reports, to really pull out the key insights for you. We want you walking away feeling genuinely well-informed, with the full picture.
Exactly. We're aiming to go beyond just those surface headlines to show you the complete story, the nuances. Because there are some, frankly, impressive operational wins in here, alongside these big strategic moves that are shaping not just United, but the whole travel industry. Let's unpack it.
Okay, so let's maybe start with the core financials, because that's probably where some of that confusion in the headlines comes from. United did report a second quarter profit. Actually, they beat Wall Street expectations on that front. Their adjusted diluted earnings per share, it came in at $3.87, so nicely within their own guidance range. But maybe more telling than just one quarter's profit is the bigger financial story here.
Yeah, that's what's kind of interesting. While their total operating revenue it grew 1.7% to $15.2 billion. And okay, yes, some analysts flag that as a slight miss. The more significant thing, I think, is their profitability.
Yeah.
And how they're clearly strengthening their financial core. United grew both earnings and their pre-tax margin in the first half of this year compared to last year.
Yeah.
And for Q2 specifically, they reported an 11.0% adjusted pre-tax margin. That suggests, discipline in operations, diverse revenue streams paying off. Look at loyalty revenue, up almost 9% year over year. Premium cabin revenue, up over 5.5%.
Right, that resilience seems key. And while we're on core metrics, it's probably worth mentioning their TRASM total revenue per available seat mile, that was down 4.0% versus Q2 last year. And CASMX, the cost metric, excluding fuel and some other things, that was up 2.2%. So you've got revenue growth, but these other metrics moving. What does that signal for their outlook?
Well, that leads right into their confidence going forward, doesn't it?
Yeah.
United actually updated its full-year guidance for adjusted diluted EPS. The new range is $9 to $11. And CEO Scott Kirby sounded pretty confident about a strong finish to the year. That wasn't just talk either. This updated guidance, it's directly tied to some pretty significant shifts they're seeing in the market right now.
Okay, and this is where it gets really interesting, I think. United mentioned seeing a 6-point jump in booking demand starting in early July, with a particularly strong double-digit acceleration in business demand. That's quite something. Plus, they're expecting another shift in industry supply around mid-August, sort of like what happened in 2024. That kind of demand surge combined with supply changes, that's a powerful tailwind, right?
Oh, absolutely. That positive demand shift is definitely a crucial piece of their updated outlook. But even putting demand aside for a second, their actual operational performance in Q2, that provides a really solid foundation for this confidence. United hit its best post-pandemic Q2 for on-time departures and seat cancellation rates. Consolidated, that is. And what's really amazing, honestly, is Newark. EWR. In June, Newark's always been a tough airport for everyone. But in June, United actually led all other major airlines there in on-time performance and lowest seat cancellations across all the NYC airports. It's a huge turnaround for Newark. Strategic.
Yeah, that Newark turnaround, plus LA and San Francisco hubs also having their best Q2 on-time departures since the pandemic. It really suggests that United Next strategy is actually, working on the ground. They even flew their biggest schedule ever for a quarter. Capacity was up, 6.6% domestically and in Canada, and 5.3% internationally in available seat miles.
Exactly. And that Newark success, it wasn't just luck. They laid it out pretty clearly. Proactive schedule tweaks, really close coordination with the FAA and the Port Authority. They got that second runway reopened early, tech upgrades. Even those strategic hourly flight caps from the FAA played a role. And the result? They say customer demand at Newark is basically back to its normal range. Booking volumes recovered in July. It just shows how focusing on operational excellence can actually drive the commercial side back.
And beyond just running the planes on time, they're making some pretty big strategic moves too, aimed at the customer experience and future growth. They announced Blue Sky, that collaboration with JetBlue, which sounds pretty unique, right? Streamlining booking, using miles across both programs.
It's more than just a code share.
Yeah. Seems like real flexibility in an industry that's usually pretty siloed. Plus, they keep expanding their premium offerings, record number of premium seats in Q2. And announced United Elevated, the new interior for the 787-9s with those new Polaris Studio suites.
Right. The customer experience focus goes even further. They launched Starlink Wi-Fi on some regional flights. That's a first, having that kind of high-speed free Wi-Fi. And the Spotify deal, also a first for an airline, putting all that content, video podcasts even, onto the CPAC screens. Their Net Promoter Score, customer satisfaction, hit its highest Q2 level since 2021. Record scores for baggage handling, cabin cleanliness, check-in. These are direct results of investment, I think.
Yeah, and sometimes it's little things too, like expanding that connection saver program, getting app notifications if your flight's held, turn-by-turn directions in the airport, self-service rebooking. They're clearly thinking about the whole journey, not just the flight itself.
And back on the financial side for a moment, they're still working on the balance sheet. In July, they paid back the rest of that debt from a 2020 deal, just using cash on hand. Which means Mileage Plus, their loyalty program, which is incredibly valuable, is now completely unencumbered. No debt attached to it. Their net leverage at the end of Q2 is down to 2.0x from 2.4x, and they generated solid cash flow, $2.2 billion operating, $1.1 billion free cash flow. Shows good financial health.
They're also really pushing the network expansion, aren't they? Pretty aggressively. Launched the biggest international expansion ever, apparently. Places like Nuuk in Greenland, Ulaanbaatar in Mongolia, and announced more new international spots. Bangkok, Ho Chi Minh City, Adelaide, making them the only U.S. airline flying there, assuming government approval.
Yeah, that global reach is definitely a theme, and it's not stopping. They've added 7 new international routes to places they already fly, like Denver to Rome, LA to Beijing, plus a dozen domestic routes and 4 in Canada. It's a clear strategy to capture diverse demand from all over.
Okay, so we've definitely unpacked a lot of positive stuff. Operations, strategy, financials look solid in many ways. But let's circle back to those perceived misses that some headlines grabbed onto. Stock Story, for instance, they highlighted United missed Q2 sales targets. Now, revenue was up, sure, 1.7% to $15.24 billion, but it was just under analyst estimates of $15.37 billion, a miss of, what, 0.9%. And their full-year EPS guidance, that midpoint of $10, was also slightly below some analyst forecasts, missed by about 1.4%.
Exactly. And if you dig into that particular analyst view from Stock Story, they also pointed out the operating margin in Q2 was 8.7%, which is down from 12.9% last year. Free cash flow margin also dipped, which, brings us right back to the importance of looking at the whole context and different interpretations. Look at Guru Focus, for example. They note analysts generally have an outperform rating, average target price around $98, suggesting decent upside. But Guru Focus's own valuation model, their GF value, puts fair value way down at $61.70, suggesting significant downside. It just shows how different models, different perspectives can lead to very different conclusions from the same basic data.
It's definitely a complex picture, much more than a single number or headline.
It really is. And just to connect this to a very specific challenge they faced that had a real impact, the investor update mentions that significant event at Newark back in May. It generated a ton of negative press and caused what they called customer book away. People actively avoided booking Newark flights or canceled them. And since EWR is over 20% of their capacity, that actually hit their bottom line, about a 1.2-point drag on their adjusted pre-tax margin in Q2, so they reported 11.0% margin. Without that Newark issue, it would have been closer to 12.2%. It's a concrete example of an external headwind. But importantly, it seems like they navigated through it, given that July booking recovery we talked about.
Okay, so let's try and summarize what all this means for you, the listener. United did report a Q2 profit. They grew earnings and pre-tax margin in the first half of the year. They showed really strong operational performance, best Q2 on-time stats post-pandemic, low cancellations, and that genuinely impressive turnaround at Newark. Strategically, they're pushing forward with things like Blue Sky with JetBlue, the new United elevated cabins, Starlink Wi-Fi, Spotify content, all while strengthening the balance sheet, paying down major debt, and updating their full-year guidance to a pretty confident $9 to $11 per share. Now, yes, there were those slight misses revenues under analyst guesses. The full-year guidance midpoint may be a touch below what some hoped for. But when you weigh that against the overall picture, the strong operational momentum, the company's own confidence backed by that demand surge and expected supply shift, it tells a much richer, more dynamic story than just missed targets.
And I think this deep dive really underscores that broader theme of, well, information literacy. You've got United's own press release focusing on the positives, the operational wins. You've got Stock Story zeroing in on the slight misses against analyst consensus. And Guru Focus offers different takes, including its own quite different valuation. Each source uses the same data, but emphasizes different things, uses different models. Understanding the full context, like the specific, quantifiable impact of that Newark event and how they recovered, it's just crucial to forming your own informed view. So maybe here's a final thought for you to mull over. Given just how much detail, how many strategic layers, and how many different perspectives can exist within just one company's quarterly report, What new strategies might you use to go beyond those easy headlines to really understand the true trajectory of the companies and industries that you care about?